Welcome to This Open House, where we talk about all things real estate related. With your hosts, David and Rebecca Guthrie of the Hacienda Group at Long Realty Company.
Welcome yet again, another episode of This Open House Show, and I am your host, David Guthrie with the Hacienda Group at Long Realty Company. And unfortunately, life of a dad, life of a mom, babysitting snafus happen. So I'm solo today, but I've got an awesome guest. One of my good buddies is going to be joining me today, James Mendenhall, now with Cross Country Mortgage, and he'll be here any minute now. If you want to patch him through, go ahead and patch him in, and then we'll talk stats together. James, you there?
I'm here. How you doing, buddy?
Doing well, my friend. Doing well. So you've made a big move lately. You're at a new mortgage company, but they're not new. They've been around for a little while. So I want to talk about that. And then we're going to talk about manufactured homes, which we never talk about. And I think it's an underserved segment of this market here. And then we're going to be talking maybe about construction loans if we have some time here. But let's jump into some stats. It is September 4th, 2021. And right now I'm showing in the city of Tucson 908 active listings. And that's actually down from August 10th. We had about 923. So we've had a rise of some inventory, which is good. We needed some of that space to help alleviate with some of these buyers. Keep in mind, some of these homes might be sitting a little bit longer. We're seeing some price adjustments, which we weren't seeing before. And I really feel the reason for that is that, you know, in February, March, April, we had sellers, you know, they're looking at a 200-mile-an-hour train, and they're looking at comps that are 3 months old, and they said, well, what's 50 grand more? Let's go ahead and try this. And now you're seeing people, buyers in particular, start to push back a little bit. So we're having some natural resistance within the market that's helping not reverse. I don't want to say it's anywhere close to a balanced market, still very seller's market, but we're just not seeing the same level of pricing increases. And we're seeing the sellers who are successful, they're the ones who are staging their home, making it available, pricing it well. And so I think right now we're going into one of my favorite types of markets. It's a market where you use comps and you actually look at data. And, you know, that's what kind of drives things. So we're seeing a slight increase. Good for you buyers. You're going to be able to hopefully get some deals out there. In the last 4 to 6 months, our median sales price was around $300,000. And in the last 3 months, we're showing a bump up to $319,000. So, again, that's a big increase, but I'm seeing that start to slow a little bit. Days on market, still sitting at 5 days on market. Now, rents, they've gone up, and we've known that's been coming. The last stat I had in Arizona over the last year was 18% increase in rental prices. Guys, that's going to continue to go. Right now, the median 3-bedroom rent is sitting at $1,595 per month. A couple weeks ago, I was showing right around $1,500. You know, this is kind of to be expected, too, because we've had a lot of those before-school rental stats coming in, and that can fluctuate a little bit here when I'm looking at these stats. So, but right now, $1,595, your median sales price on a 3-bedroom home is sitting around $284,000. With the 20% down payment, you're looking at about $1,277 a month versus $1,595 to rent a similar house. It's a savings about $318. It's still a great time to buy. And James, what's up with interest rates? What are they doing right now?
Interest rates are still very, very low. Good credit. We're in the high 2s, no problem whatsoever.
Nice.
Mediocre credit in the mid 3s. So
Okay.
definitely all-time low rate still, which really helps keep your mortgage payment down.
Yeah, and there's a lot of things that we can do to help boost up mediocre credit. All of those are custom things. If you guys want some information on that or anything that we're talking about here, including access, full MLS search, or if you just like a real estate question answered, 520-462 2611. That's 520-462-2611. You can also email info@thisopenhouseshow.com, or you can go check out www.thisopenhouseshow.com. Full MLS search, see what's coming on the market. And if you have questions about any of those addresses, feel free to shoot an email or a text out. So let's get into some manufactured homes here. Those historically, they're a little bit tougher sometimes to finance. At least that's the consensus out there. Tell me, what's going on at Cross Country Mortgage? How can we help these people who are either currently in a manufactured home, may need to refinance out into a better interest rate, save some money monthly, or maybe just get into something a lot more affordable?
Yeah, so a lot of people have a misunderstanding of manufactured homes and thinking they are a lot harder to finance. But actually, in all reality, we do manufactured homes just like any other type of mortgage product. Now, the home itself has to be in somewhat good condition, so we can't finance one, obviously, that's in very poor condition, and that goes with any other type of financing. Sometimes they are just not financeable whatsoever. But if you do have a nice manufactured home that's built in 1976 or newer, either a single or a double wide, usually we have pretty much no problem financing those whatsoever. And in Tucson, with how much the home prices have gone up, it may be a great opportunity for somebody that wants to get into a nice property.
Yeah.
Especially if you want that horse property and can't afford, a $750,000 to $1 million home. And that's what it seems like those type of properties are going for these days.
Right.
Versus
Right.
you can get the horse property with some acreage and, still afford that. Absolutely.
Now, manufactured homes, my understanding, they're still having some of the same issues with supply chain that a lot of our other construction trades were dealing with. I was speaking with Clayton. I think it was Clayton, one of the people out there. They were 18 months out before they could talk about any kind of wholesaling. As far as getting a number of manufactured homes, putting them on lots and that sort of thing. So they're still out there. You just need to expect some delays on the new, but there's a ton of resale opportunity out there when it comes to manufactured homes, both on and off market. I'm looking at one right now, 3-bedroom, 2-bathroom, $154,000. I mean, that's a great deal right now. You can fit a whole family in there and live with a reasonable mortgage payment as opposed to spending, $350.
Yeah, exactly. And with manufactured homes, they do have a 3.5% down option through FHA, as well as they do go down to a 5% down conventional loan program. And obviously for our vets, you can put 0 down with the VA loan on manufactured homes as well.
Yeah.
So all of those low down payment options are available on the manufactured homes. Now, I want to touch back on what you were saying for the new manufactured homes. So Cross Country, we do have a loan program where you can actually finance the land and the manufactured home all into one deal. So it's kind of like a new build. So you get a brand new manufactured home and put it on the acres that you want or the lot, and we finance it all in one package deal. So that is an exclusive program that we have at Cross Country. It's a great program.
Yeah.
You would have to wait until the actual manufactured home companies catch up with COVID and everything, but that does allow a lot of options, especially here in Tucson. Our rural areas have a lot of land for sale.
Yeah, and land is a different beast. There's a lot of considerations that we have with land, utilities, zoning, where are you going to place the unit? You don't want to plop that in where all of a sudden you're in the middle of a riparian, gonna flood or something like that. And then I know I mentioned utilities, but think about septic, sewer hookups, those kind of things. All of those are really, really critical. So James, you're right. You can save a bunch of money there, but it's really very important. When it comes to land, you need a professional. You need somebody who actually does this and looks at these. Rebecca and I have sold lots and lots of land and are ready to help you guys if you do want to try to go that route and maybe save some money and have something new. but it's not as easy as just plopping something on a piece of dirt. There's a lot of considerations that go in here. Speaking of considerations, going back to resale, one of the things that surprised me was in order for financing to be available on a manufactured home, it has to have never been moved. So once we affix the home, and we talk about a fixture, it's a permitted process that happens when we actually marry the manufactured home to the land, just like a site-built house. It no longer is looked at as personal property, and then it becomes real property attached to the land, and it is taxed as that. Once it's affixed, once it's sitting there, if you pick it up and move it, my understanding is even on the same lot, like maybe you just want to change the orientation and have a slightly different view or something. James, that does ruin the financing. Is that correct?
Yeah, once you move a manufactured home, it's null and void at that point in time for ever being financeable again. And a lot of people would think, well, how would you know that? We actually get the original titles, and the titles have an address of where the manufactured home was delivered to. And if it does not match, unfortunately, the manufactured home is not financeable anymore. So if we are looking at new construction manufactured homes, they have to be brand new. We can't take one on one lot and move it to another lot and then affix it and finance it. It all has to be brand new if we go that route.
Even if it's in great condition. Yeah.
Yeah, exactly.
There are some owner carryback options and some of those things. Again, that's something that we could help you with on a case-by-case basis. But the point is, yeah, we need to either have it be new, fresh, put down, or by resale. Fortunately, there's a number of inventory out there that we can help people look at with this. So let's see here. I think we're getting close to a break. Let's talk about VA loans real quick. Manufactured in VA, that's not something that we necessarily see a whole lot of. You know, the VA loan allows veterans to get into real property without having a down payment. They work those things into what's called a VA funding fee. If you are disabled, right, James, you don't have that funding fee. Is it a sliding scale depending on your disability, or is it 100% or nothing?
Either 100% or nothing, and it has to be approved through the VA. So just because you have a disability, if it's not through the VA itself, you'll still have a funding fee.
And how would our listeners know the difference? I mean, is it one of those things where you just know you're not gonna? Yeah. And
so you can call the VA anytime as well, and they will let you know if you are eligible to have your VA loan and if you are exempt from the VA funding fee. But usually, if you're medically discharged from the military, most of the time you're not going to have a VA funding fee.
Right, which is a great deal. I mean, it almost makes that the best deal on the planet when it comes to real estate, because you get a zero down loan, and then you don't have that VA funding fee that you're going to add back into the loan and pay over 30 years, which is substantial. And you could get into some really great properties that way. Now, the VA loan limits on that, for a while, it seemed like they kind of went away and you could almost do any price range. But my understanding is that there's some limitations back on that. Do you know the limits?
Yeah, they never went away. So you have a bucket for a VA home loan on how much VA home loan you can have out at a time with your zero down amount.
Okay.
It follows whatever county's conforming loan limits are currently. So right now we're in the mid 500s for a conforming loan limit. So that's Fannie Mae, FHA, conventional financing. Mm-hmm. Now, if you do go above that amount, you can still use your VA loan, but it's 25 cents on the dollar that you have to come in with your own funds at that point in time. So there is an unlimited amount of VA loan eligibility available, but you only have a certain amount with the zero down option. And typically, once you get to the 25% on the dollar that you need, makes more sense to go conventional financing at that point in time, because conventional, you only need 20% down.
Excellent. Case-by-case basis. Again, that's something we can talk to you about if you want to go learn about some of these things or see, is your manufactured home financeable, or do you have one you might want to look at, or even a single-family residence? 520-462-2611 is the number. Guys, we're going to see you on the other side of the break.
Are you interested in the real estate market? What does low inventory actually mean? Funny, real-life real estate stories and things you should never do if you're looking to buy or sell a home. Join me, David Guthrie, and my wife, Rebecca Guthrie. We are full-time real estate agents with the Hacienda Group at Long Realty Company for this open house on Saturday mornings at 11 a.m. on 1030 The Voice, where we will discuss all this and more. That's this open house on Saturdays at 11 on 1030 The Voice.
Welcome back yet again. David Guthrie, Hacienda Group, Long Realty Company. And we are live today with my good friend and one of the people we refer lots of business to, James Mendenhall over at Cross Country Mortgage. James, thanks for joining us today. We've been talking about manufactured homes and home loans and those kind of things. Are there any differences with refinancing? Because there are a lot of people out there who have been stuck with subpar loans because maybe their credit situation at the time that they got this was not great, or just the fact that they were buying a manufactured home limited their choices quite a bit. Do you guys have any special programs as far as refinancing on those?
Well, with refinancing right now, with the market going up so much, it's made it very easy to actually do refinances for all loan programs. A lot of people we close with FHA loans I'm now doing into a conventional loan program with not having an appraisal done and removing their mortgage insurance that they had for 30 years.
Yeah.
So that's a huge plus. And that also goes with manufactured homes. So a lot of manufactured homes, you do go in FHA and you do have that mortgage insurance for 30 years. Depending on credit scores and all that fun stuff, I have been able to get people out of a FHA loan on manufactured into a conventional loan with no mortgage insurance. So that, that's, let's just say average of $200 a month that goes away. So that's $2,400 a year. And then in 2 years, you're up to $4,800. So it can be a huge, substantial savings with how much the market's gone up and being able to get these refinances done for everybody.
And what is private mortgage insurance? We've mentioned this a couple times. So on an FHA loan, you have this extra add-on with your loan that you have to pay monthly, and on an FHA loan that never goes away for the life of the loan.
Yeah.
What is private mortgage insurance? What does it do?
So a lot of people have no idea, so this is a great question. It's actually insurance that you pay that goes to the banks directly to cover any costs that is obtained if your property goes to trustee sale. So it's insurance to the bank that pays the difference between what the bank got the property back at and what it actually costs to go to trustee sale. So if there's a deficit on how much the property went to trustee sale at, the bank itself is paid back the deficit. So it's insurance that actually protects the bank directly.
So basically the consumer is subsidizing the low interest rates, getting the risk down, because everything when in business, it's all about risk, right? So if my risk is higher, I'm going to expect a much higher rate of return on my investment, dollar for dollar. And so if I'm giving somebody money for their housing, the higher the risk, the more I want for that. Now, in order to help keep the economy going and keep things moving, private mortgage insurance has stepped in and exists, and it has people on FHA loans or conventional loans with less than 20% down payment, or 74% loan to value. Those borrowers are paying into those insurance products for the bank that keeps the mortgage low. This is not the same kind of insurance to where if you die, somebody steps in and pays, which, by the way, anybody who's closed on a loan or bought a house recently, you've seen the stuff that comes in your mail. Any of that stuff that comes in, I got to tell you, I've never seen one that has been a good deal for insurance that's going to pay, whatever. pay your burial or pay for your mortgage or whatever, talk to your actual agents, okay? Because you're going to get a better deal dollar for dollar on those things, but they're not the same kind of insurance product. And so when you're saying you're flipping out of FHA into a conventional product and you're getting rid of the mortgage insurance, the reason that you're able to do that is because the market is increased enough to where the borrower doesn't necessarily have to put any more down. But all of a sudden, you now have the benefit of a 20% down conventional loan. And so what's happened is now we're doing a refinance. We're taking the old loan, the FHA loan that you're never going to stop paying the $140 to $200 a month mortgage insurance on. And just by the fact that the market's changed, you've reduced the risk for the new lender. And now you're getting a great deal. Not only are you getting a great interest rate because you have all this loan to value and the lender's looking at, well, if I've got to foreclose on this, there's no problem here. We're good. That's going to help you on your rate. That's also going to help you on your monthly payment with mortgage insurance. So I often ask our clients, hey, what are you going to do with an extra $200 a month? It's a great question, and I get all kinds of crazy answers. Anything to add to that, James?
That's pretty much spot on. I mean, it's a big savings. It definitely helps take that $200 and put it into the local economy. If you invested it in the stock market, it would make you a ton of money over 10 years.
Right.
It's just a great way to save money. And now a lot of people think, well, it's only $200 a month, but that's why I say it's $2,400 a year, because that's a substantial amount of money in 12 months that you're saving.
Right.
And I mean, people,
that's a month of daycare for a lot of people.
Yes, exactly. I mean, it's a great savings, and the good thing is Fannie Mae and Freddie Mac have eased up appraisal requirements. So I have to run it through what's called our desktop underwriting system. But, 95% of the time I'm able to do these without an appraisal, which saves $600 and a huge amount of time. And we can get these done, relatively 4 to 6 weeks, and then you're refinanced with a brand new mortgage. I've also had some people go from a 30 to a 15-year mortgage, because those interest rates are in the low twos. So then at that point in time, I have a father and son who are saving almost $500,000 altogether on their houses by doing that. So that's also a great option that I look at with everybody.
Yeah, and if we're flipping you into a 15-year mortgage, okay, your payments are going to go up a little bit, but if we're reducing that mortgage insurance by a couple $100, basically what you're doing is you're shifting that payment right over to the other side of the balance sheet, and you're having this compound effect of every month paying more and more and more, so that as time goes on, the interest savings over the life of the loan could easily be $50,000 to $100,000 depending on the sales price. And that's a huge savings for people. And so one of the other questions that and I just love seeing this stuff, James. I know with a lot of our clients, our past clients who we've sold homes to a couple years ago, we know that they're refinancing. We talk to them about that. We keep up with our past clients. And I love seeing and hearing these stories about people saving so much money. I mean, that's a college education, for God's sakes, for a lot of people that are sitting here doing this. Speaking of college education, with our 2 minutes, one of the things that Rebecca and I are we're doing for a lot of our clients and a lot of our parents and even grandparents, thinking about different ways that you can save for your children. And one of the ways that I love is real estate. And you can go ahead and buy yourself an income property. We're seeing those rents go up. James, what's the down payment on a non-owner occupied income property right now?
20% down.
So 20% down, it's a little bit higher barrier to entry. But if you think about it, if you've got that college fund, if we could go ahead and put that money into something that's actually not only appreciating but cash flowing, you let that renter build up a nice little nest egg as far as your maintenance is concerned. Whoops, got my phone ringing. As far as the maintenance is concerned, and you over time then just allow that renter, okay, to go ahead and build that piggy bank up. By the time your kid's ready in 20, 30 years from now, either by selling the property or just by the the increase in value doing a cash out refinance or whatever, you could have a great chunk of your kid's college payment. And James, you help with all of those things, not just income property for people, non-owner occupied, refinances of your current primary residence. And we would love to see our listeners, those of us out there who are the underserved manufactured market, getting into some better quality, affordable housing out there. You go ahead and give me a call anytime, 520-462-2611. That's 520-462-2611. info@thisopenhouseshow.com. James, my friend, it's always a pleasure. Keep up the great work.
Absolutely.